All right. So this Toba One in New York. So we'll get started now. Thank you all for joining this webinar, AI and Insurance Beyond Automation. I know we have a lot of people who signed up from all over the world. So good morning, good afternoon, and good evening. So we'll get started. And before we introduce the speakers for this webinar, we wanted to quickly give you an overview of InsurTech New York, who is the organizer of this webinar, along with Hyperexponential. So InsurTech New York, for those of you who don't know us, we had multiple programs to help accelerate innovation in the insurance ecosystem. We work with carriers and brokers and InsurTechs, from tech enablers to brokers and underwriters. We work with other associations, investors, and consultants, really to help them get connected and really accelerate innovation. And we do this through multiple programs you see in front of you. We host early stage startup competition. We host InsurTech Match program, which is like an accelerator where we connect later stage InsurTechs to carrier brokers. We also have a program called MGA Lab where we help create new MGA startup businesses as well. And so the application for the InsurTech Match MGA Lab should be opening up in the next couple of months. So if you're a InsurTech, please watch out for that. And then the finalists for the early stage competition are actually going to be pitching in our upcoming spring conference, which I'll talk a little bit more about. And then in terms of education and networking, we host a number of different events throughout the year, including the spring conference, which I'll talk about, but we also host other executive roundtables, community events. We also do quite a bit of research, and we publish them as well, including an MGA report we recently published and innovation research we're publishing in the next few weeks. And finally, we also invest. So we are a C-stage InsurTech fund, and we invest anywhere from 6 to 8 companies per year. And so if you're interested in getting funding or interested in joining the fund as an LP, please let me know. And next slide, this has our calendar for the year. We host multiple activities throughout the year. And our next really big event is coming up in April. We host our spring conference. We also do a number of different invite-only events on topics related to AI, bringing AI to reality. We have the update dinners. And then in Q3 and Q4, we have a claims public event and an Asian tech event as well. And as you see here, I have a calendar of the competition, InsurTech Match, and MGA Lab that I described earlier. So hopefully you're able to participate in some or all of these activities. We have different activities for everyone in the ecosystem. So if you're not sure which ones to attend or how to attend them, you are more than welcome to send an email back to us. I'm sure you've received email from Aaron, myself, Tyrell, or operations@insurtech.com. We're a small team, so we'll be able to respond back to you very quickly. And spring conference, this is our big annual conference that we host once a year. We typically get about 800 to 1,000 people attending this. And Hyperexponential is a presenting sponsor for this event. But there are also many other InsurTechs are attending. And really the content for this big conference is for carriers and brokers who are interested in learning more about innovation. And so hopefully you guys, if you haven't registered already, hopefully you can register. It's April 2nd to 3rd in New York, Chelsea Piers. And, Hyperexponential CEO Amit will be doing a keynote speaking. So on build versus buy in the AI world, which is kind of a new topic that has been sort of discussed in the past, which is that, hey, if you're a carrier or broker, we don't have the best engineering talent. Why are we creating new technology in-house? Let's just partner with startups and vendors. That's been sort of kind of the answer. But now with generative AI being sort of available, there's a bit of a question mark on whether a carrier should build or buy. But there's another option, which is partner. So, they'll be kind of talking about it at the conference. All right. So now I would like to ask Risa, Brian, Richard to turn your video on and unmute yourself. So quick introduction. Risa and Richard are from Hyperexponential, which they'll do a better job than I am in explaining what they do, but they're in the pricing AI actuary space, in the commercial underwriting space. And then Brian is works with my competitor in the actuarial department as well. So they'll be talking about how AI can help in insurance, and it's not just automation; they can do a lot more. And so, without further ado, I'll hand it off to Risa. You can start. Thank you.
Thanks, Tony. Thanks very much. I have the pleasure of moderating this panel today with two of my favorite people, so it's going to be a fun half hour. I'm going to get into three topics. The first being how AI is currently being used to understand risk assessment, and the underwriting process. Is it really changing what we write? And can we use it to drive strategic expansion? We will go down a lot of rabbit holes, I'm sure, or have a lot of sidebar conversations. And so hopefully we can hit on a lot of interesting stuff. But before we get into that, I'm Risa Ryan. I am an advisor to Hyperexponential. I've been in the industry forever on the actuarial side, on the underwriting side, on the insurance side, on the reinsurance side. So have seen most everything and have opinions about everything, but I'm the moderator, so I'll keep them to myself. I'll try. All right. So Brian and Richard, why don't you guys introduce yourselves, and then we'll get into the questions. Brian.
Hello, everyone. My name is Brian Johnson. I'm a guy carpenter. I work out of Philadelphia. I'm the head of North American Actuarial Advisory. So we have a team of about maybe 85 actuaries across North America. And we assist the brokers with placing business, advocating for our clients, doing consulting work. Like Risa, I've been in this industry forever and a day, probably even a little longer than her, I think, if I remember correctly. I'm a credential actuary, an associate of the Casualty Actuarial Society, but I'm also an underwriter, and I've kind of done both over my 30-something years of experience. I'm happy to be here.
I got you beat, Brian.
Yeah, okay.
Richard.
Rounding down, Risa. I'm just saying.
You both got me beat. We're looking at over 6 years in the industry. So I work at Hyperexponential. Brief introduction to what Hyperexponential does. So our mission is ultimately to build the decision infrastructure for the insurance ecosystem. This ultimately resolves to a platform that we've built. For those of you who are clients, it's referred to as HX Renew. And this is leveraged by insurers, reinsurers, MGA, some brokers as well in the meantime to build and deploy pricing and underwriting tools. So whilst I have fewer years under my belt in the insurance sector, I spend my day-to-day working both with a team of actuaries and technologists at Hyperexponential and with our 40 clients who collectively write $45 billion of premium, a lot of which is in the US commercial P&C market. So excited to kind of have this discussion and share some of the insights from that.
Perfect. All right. Thanks, guys. I think with your backgrounds and your experience, we're going to have a good conversation. So let's start it off, maybe, Brian, with you. How is AI being used to understand risk assessment, maybe streamline the underwriting process? Can you give us your thoughts on where that is currently?
Yeah. So right now, I would say the industry in general is going to vary. It's at the beginning of saying, hey, how do we adequately use AI to do our job? I mean, obviously, some basic things folks are using it, to the large language model aspect of it to, compile summary of notes, summary of meetings, things like that, emails. But what I'm starting to see is actuaries, data folks using it. Number one, they can use it to help sort and correlate data. So if you have a huge data set, you have 10,000 records, and you say, hey, you know what? We want to look at experience if you pull out any claim having to do with social service, but your client doesn't have a social service indicator. Well, you could go through and look at the claims description and say, hey, here's a claims description. Here's a client, the client who's having the claim. And back in the day, you can go through and look at each claim and say, yeah, this might be one. Now you could throw all that into a large language model and say, hey, pull out any claim that has the term social service, that has the term adoption agency, and it'll pull it out and say, okay, what'll happen to the data if we do this? I've used quite a few of the large language models, and they're pretty good at doing simple correlation. They'll point out some simple statistics and say, hey, here's an average of this, here's an average of that, here's some things to look at. But I think, because they are primarily large language models, there's still some development that needs to happen on the, as far as the analytical side. And then I'll throw one more thing in just for coding help. So a lot of actuaries now are using Python or using Alteryx and different models. The large language models are great. I get an error, I throw it into something and say, what is this error and how do you fix it? 9 times out of 10, it comes right back with an answer.
Right. So it's kind of speeds up and makes things more efficient. Let me ask you a question with regard to kind of we're at the early stages, and I'm going to kind of bring in something that you probably expect me to bring in here, which is
No idea.
the fact that 50% of the industry is going to retire in the next 5 years. If we're in the early stages, how worried are you about AI not moving fast enough to get all of that information from the folks that are kind of poised to exit, so that we can actually build those models and ask the right questions of the large language models, that are analyzing the claims history? Are you concerned about that at all?
Yeah. So I'm concerned about that gap between, seriously, us and then the next level down. Just in general, right? There's a 15, 20-year gap where the industry we weren't hiring people. People weren't going into the industry. That's a general worry. With respect with the large language models, look, as we use them more and we request more and we correct them as we're using, they're just going to get better and better.
Right.
So really the solution is saying, hey, while our cohort is still working and doing stuff, use it, move forward, keep it developing. And so by the time we're out, it can do things. At the end of the day, what it's going to do is it's really going to relieve a lot of tedious work from that next cohort.
Yeah.
So they can actually have more time to learn the important things. They're not spending time sorting through data. They're not spending time trying to correlate notes to make a summary memo. They can use it. They'll be more efficient and they can put their time where it's important.
Right. All right. So here's another question. And Richard, please chime in. And it's still related to the large language models and the use of them. And it's kind of the age-old question that any one of these conversations has to ask, is the idea of bias in those algorithms. And really, my question is, are humans, do you think, bringing as much or more bias than the algorithms? Is one better or worse than the other? Do we know? Are you worried? What are your thoughts on that?
I'll let you go first, Richard.
Yeah. So I think it depends how you're leveraging it, right? I think in the same way that you can frame your question around, are we concerned that 50% of the industry are going to be leaving in X amount of years? Are they going to be able to push that information down? You can look at that same question, which is like, how quickly will the evolving landscape of AI allow the rest of the cohort to step up?
Yeah.
If we reflect on, and I'm sure people have felt this because I suspect most of this audience are in the industry, the quick wins that we've unlocked have been the ones that Brian has kind of talked through around ingestion of complex data and how do you leverage the co-pilots to build and deploy tools more quickly. And I think what we're not seeing much of yet is what AI is very good at, which is combing data and being able to drive insights from a large volume of data much more quickly than a human. And people will often refer to we're very concerned about said senior underwriter leaving because they can just intuitively look at a submission and pick out the one or two things that they care about. And whilst a lot of that will be the art of a deal, that's actually also something that AI should be very good at, which is combing a far greater volume of data and picking out the nuances that maybe you should double click on. And I suspect where we'll like first see that being impactful will be at renewals, which like looking across our clients, some of our renewals have like clients have north of 90% renewals. Like at renewal, the first thing you want to find out is like, the second thing you want to find is like, what was that change and do I need to look at it? And that's something that actually like leveraging the LLM capabilities can do very quickly. And that means as you're upskilling that kind of junior underwriter and they're having a conversation with the more senior underwriter, they can be spending their time talking and transferring the wisdom around that one data point rather than like hey, I'm looking at these 100 data points across this risk and that's why I'm narrowing in on it.
Yeah.
I think you're right to highlight that there will be an issue with bias. Like if you think about if you think about what LLMs do, like they effectively like look at data in the past and predict the next word. And so they will, like, it's almost tautological that they will carry historical bias. And like, interestingly, like there's a lot of literature out there at the moment around the fact that the different LLMs are now being gamed for the tests that they're put through around performance and efficiency and this, that, and the other. There's definitely something that we should exert some effort over understanding and thinking about where it might bring in bias. I think the way that we look at this and we work with clients on it is at the moment thinking about how you augment and support an underwriter or an actuary or a practitioner with the AI tooling, almost like an analyst on their shoulder, which can say like, hey, I'm looking at that past data and it's suggesting this. Do you want to look at it? So not kind of like kicking out the human in the loop whilst you actually like untackle what is a gnarly problem and very important, particularly in like the emitted space with the regulatory conditions, right?
Right. Okay, I just took a glance at the clock and we could just go on for an hour. So this is crazy because I have so many questions to ask you guys. Maybe the two important ones I think that we need to talk through are the measuring the impact of AI. How are companies, do you think, going to be able to do that and understand the impact that it has on the accuracy? Like, is this all worth it? How should companies be looking at this, do you think?
Yeah. So I should have started with this. And as we were talking earlier, I mentioned this. AI is a tool like any other tool we have. It's just an additional tool to help us do our jobs better, to eliminate, tedious tasks, essentially to help our colleagues, our employees upskill their own skills and do what they can do better. So how is it going to be measured? Like any other tool, you're going to look at and say, hey, what are my employees spending time on? What are they? And so to the extent you track that, hey, I spent an hour doing this, I spent 2 hours doing this, you should see a decrease in some of the more tedious tasks. To the fact that a lot of people don't actually do a good job tracking the efficiency of their staff or their team, it'll be harder to measure. But like any other tool, you're just going to track it based on what the employees are doing. Once it's applied to like Richard said, to some renewal, doing renewals, doing new business, at some point you're going to step back and say, okay, yeah, this group of renewals and new business, we used a lot of AI to do these things. This group we did. Is there a difference in
little A/B testing? Yeah.
Is there a different results?
I think to jump in there, so I think you mentioned two things there. One is like kind of the ROI question, and the other one is accuracy, which aren't always the same thing. I think accuracy, there's also a human element in terms of building confidence. I was speaking to one of the very large US carriers, and they had rolled out their own LLM capability for data ingestion. And the first instance about 12 months ago, like the underlying models, it had about an 85% accuracy, and the team blew up on it and were like, I don't know whether I can trust this. Can we work with it? Is this going to solve my problems? And so they did a test of their previous outsourced team offshore who were ingesting that data for them, and that only had a 75% accuracy. So it was more accurate. It was just done by technology rather than a team in a different geography. And so like educating the team and helping them understand what we've moved from and to. I think the ROI one's a really interesting one. We have a chief product officer, and broadly his job is to become a student to the market and to our customers to understand whether or not and where they derive the most value. And he's got a phrase that he's coined, which is like, as a market, we have an operational efficiency problem with a loss ratio implication. And I really like that because if we are able to enable our actuaries or our underwriters or our IT teams to be more efficient, whilst the one-to-one kind of total cost of ownership calculation of that might be, therefore you need X fewer headcount. In reality, what you want to drive at is that headcount is spending their time on value generative activities. So rather than hating their life because they're copying and pasting something for the third time that day, they're thinking deeply around, the framework we use is data, insight, decision. It's the human that makes the decision, particularly in the commercial P&C space when you've got an underwriter in the loop. And so you should be able to leverage tooling to capture that data, surface up insight, and then allow the underwriter to spend more time around what that decision looks like. Maybe they want to enrich it with more insight that you wouldn't be able to get from a system. And then that will ultimately impact your loss ratio and your profitability, hopefully, rather than your expense ratio. Now, of course, if you're selling it to a CFO, you double click on the expense ratio saving because 1 on 1 needs to equal less than 2. But as a business, when you're thinking about how you're going to drive competitive advantage in the modern world, you want to think about, actually, is it going to allow me to move more quickly, move faster than my competitors, and move in line with what the market needs?
Right. So it's interesting. What you both have described is a lot of kind of process-driven efficiencies and taking all that manual, kind of tedious tasks out of the equation and let smart people be smart people and underwrite. What are your thoughts on the potential then for us writing risks that are more complex and more complicated? Will AI help us do that? And do you have any concerns associated with that? Brian, why don't you?
Yeah, so I think, yes, from the standpoint of it, it'll make it more efficient to comb through and say, hey, let me look for correlation, let me look for commonalities and say, we should or shouldn't write this risk. Hey, how does this risk look when compared to the rise in litigation funding? Are these risks more likely to be affected by litigation funding? It's going to make it more efficient to do it, and it's going to make it easier for us to do it. But again, it's just a tool, and so we are going to have the same issues and concerns like we have with any tool. Is there a human there to check the results? Is it just a black box spitting out numbers? We're going to have to be very, very prepared to, and even change your paradigm a little bit to watch our underwriters or our claims people on the back end where it's used to make sure they're not overly relying on whatever it spits out and not doing that analysis, right? So again, I look at this as a way for our colleagues to upskill what they do, upskill their jobs to say, hey, we're looking at this a little better. I heard a quote. It said, a lot of people say, oh, are our jobs going to be replaced with AI? No, but our jobs will be replaced by people who can use AI better than us.
Right. Yeah, very true.
I'd add to that as well as I think it's a great thing if it enables us to make riskier decisions, right? That's ultimately the role of the insurance industry. And the framework...
Profitable, risky decisions.
Profitable, risky decisions, yes.
Yeah, and the framework we apply there is, are you introducing process uncertainty or are you introducing parameter uncertainty, right? And if you can leverage AI to have more certainty around the process that you're following, or you can leverage it to have more visibility, more confidence around the parameters that you're kind of leveraging to make that decision, particularly at the point of pricing or underwriting, then hopefully it will help you to either drive more profitability in areas that other people don't see it, or be able to increase coverage that you wouldn't otherwise be able to write. And I'm aware that I'm entering this as the ever tech optimist, but we see it as a great opportunity to at least challenge ourselves and our clients to think about what could you get comfortable learning about that you couldn't beforehand because it was either inefficient or impossible to do so. And those answers will probably peter out over a matter of years rather than matters of days and weeks as people focus on the operational gains today. But it's definitely an exciting potential outcome.
Yeah, I completely agree. I think we should be positioning ourselves to write more complex, more hazardous risks because we're going to know more about them. I think the trick is going to be from an underwriting governance standpoint to make sure, Brian, like you said, that we've got the controls in place and we're prepared for that kind of brave new world. I think that's going to be critical. One last question, and then I'll ask for a couple of words of wisdom from you guys. The insurance industry has always been a relationship industry, and as AI is used more and more for not only processes, but evaluating risk and, kind of potentially gets into the client relationship space. What do you think of that? Do you think that it's ultimately going to undermine our relationships with our clients? And I think about my kids who are grown, productive members of society, but probably would never pick up a phone and is there even such a thing as a phone? They would never pick up their cell phone and call somebody. And so AI is going to undermine our relationships with clients. Brian, you want to go ahead?
Oh, okay. So, yeah, I don't think it'll undermine, it'll change it. So if you look back at any technological advancement, they always ask that question. So you roll back 100 years ago, or I guess at this point it was 200 years ago, the telephone was invented. And people say, wait a minute, you're just going to get on the phone. You're not going to go over to someone's house and talk to them. You're not going to write letters anymore. You're going to just pick up the phone. So, when email came out, emails, what do you mean? That's going to take away your relationship with your client because you're going to be doing everything over emails. It will evolve. And in fact, we're seeing it, like you said, research with our kids. The way they communicate, it's not necessarily worse or wrong. It's different. So yeah, it will evolve. It will be different. Will it be good or bad? I guess we'll see. It's a tool like any other tool. It could be used for good or evil.
Yeah. Yeah. All right. I think Tony's going to give us a 1 minute warning here in a second. Do you, Brian and Richard, have any parting words of wisdom?
You words, Richard.
Yeah, I think you touched upon earlier that this is kind of a tool and you decide how to use it. One thing that I like, the framing that I like to consider this through, particularly when we're thinking about insurers, reinsurers, MGAs, is like the impact that it'll have on the business will be 10% the underlying technology, 20% the apps, and 70% kind of the change management process and how people use it on top of it. That was a really helpful framing for me that someone shared a while ago to realize that actually it's how we implement it and how we leverage it in our respective businesses that will make the biggest impact. So enjoyed this conversation though. I'll hand over to Brian for his words of wisdom.
Yeah. So I just want to say to anybody on the call, if you haven't tried anything with AI, a model, Gemini, Copilot, ChatGPT, please try it today. Even if it's something simple like, hey, I just had a meeting. I have all these notes written down. Throw the notes into an AI and say, summarize the notes, give me the big bullet points. What are the follow-ups? Because if you don't try it, if you don't use it, you'll always be afraid. You always think it's a bad thing. You won't take advantage of it. Don't get left behind. Don't get left behind.
Perfect. That's great advice. There's so many fun things to do with it. So I just got a word that we do have time for a couple of questions. We do have one question so far. Are there, and I'll throw this out to either Brian or Richard, are there any risks using non-US based AI models? Great question.
A very hard answer because there's a massive it depends. I started my career as a consultant, so most answers. And apologies for the consultants.
Brian will say there's a range, being the actuary.
So what's the deviation is what we need to adjudicate. I think it depends what you're doing and which AI model you're leveraging, right? There's lots of both open source tools that you can leverage fairly safely if you know how you're using them, and then proprietary tools that are not based in the US that you could fairly confidently use. And there will be some regulatory use cases in environments where all the data has to sit in the US, probably some HIPAA requirement or something along those lines. So I'm probably not qualified to extrapolate from that much more.
Brian, any thoughts?
Oh, not on that, but I do see a good question now.
Okay, go ahead.
It says, how can we use AI to review insurance policies against our standard checklist? So it's interesting. There's I work with a team. It's called Codex, CODEX, and they're working with large language models to ingest policy forms and treaties and help both the underwriting side to say, hey, what does this cover versus what does the risk do, but also to help on the claim side. So you get a claim in, you run it through this model, and it says, okay, here are your treaties you have effect, here are your endorsements, here are your exclusions. Is this claim covered? They're fairly far along with a lot of the standard ISO forms and NCCI forms. And I don't think they rolled it out, en masse yet, but there's a lot of research being done to that. And eventually that's going to be a huge tool, a really important tool for your claims folks.
Thank you, Brian. We do have another question here. How can one learn or master AI to effectively use in your MGA or agency with no experience currently in it?
I'm going to jump into that.
Yeah.
Why don't you take that, Richard?
Reach out. Be very happy to have a conversation and see how we can partner. But how would I approach that? I think twofold. Like one is, as per Brian's parting words of wisdom, just start using it and encourage like the best and brightest people in your team to do that. It's one learning I've had building the business at Hyperexponential is if you put the resources around the best people, they'll create some kind of spectacular outcomes. So just encouraging them to leverage whether it's Open AI, ChatGPT, any of the other ones. And then looking through the different angle as the kind of business owner, if you're asking yourself that question, is look at the biggest pain points that you need to solve in your business. Like where are you currently wasting time? Or where do you think you could be adding differential value either to your competitors or to your customers? And then looking if there are any use cases related to that. I also am amazed by how well any one of the LLMs can answer those questions. So if you drop into ChatGPT or whichever one you choose to use that question, I imagine it will take you on a trail and give you a couple of answers that you can start exploring. I've got my memory saved on, so I did throw that question and it did say speak with Hyperexponential. So there's proof that
It's thoughts. And I was just going to suggest that you take everything that it tells you with a grain of salt, but not that one.
Yeah. That sounds like a little bit of bias to me, but okay.
It's exponential.
But one other, and this is, I think it was you, Richard, that told me about this. One way to start playing around with it, if you have kids that like nighttime stories, Richard, was it you that said you asked your child to, give a color and a monster and.
I don't generally choose monsters. So my kids are 4 and 2. So yeah, and I don't know whether I'm proud or ashamed that I leverage
Sorry, am I? And now
Stories, Richard.
I thought it was brilliant.
It's brilliant. Like I'll say, like if we've like read a book about elephants and Freddie's favorite color is blue on that day, and it changes most days, I'll say like, tell me a 5-minute story which puts Freddie at the heart of it, and it has an elephant, and the elephant turns blue, and then it'll build this brilliant story, and I'll read it to him, and it's great. So like, it's also a great when you're deciding what to cook for young kids for a week, which is like one of the hardest things for me ever to go 0 to 1 on. So using it in those ways, we'll just realize how like approachable it is, I guess. But yeah, you get me in front of a large audience now.
Wow. I thought that was brilliant when you told me that, but that you can use it for anything like that. So we are up on time, but we've got a bunch more questions. So anybody can stick around. Richard and Brian, if you're good to keep going, I think it's a valuable conversation. Another question is, in your opinion, how are capacity providers prioritizing targeted benefits from AI implementations between operational efficiency, revenue production, customer service, claims, and underwriting? So kind of rank them. Again, it's operational efficiency, revenue, customer service, claims, and underwriting. Where are companies you know what I mean? Prioritizing.
Yeah. It's less of a prioritization than what can the model do right now. So it's definitely being used on coding and data ingestion. It's just that's almost an easy one. All the things Richard talked about, being able to look at data, large data, make decisions, find correlations. That's an easy one. I guess, again, there's a lot of research being done on policy ingestion and to help with claims analyses. So that's coming along. In underwriting, I haven't seen it. Richard, you gave a lot of great examples how it's being used in underwriting. I haven't seen any clients necessarily using AI right now in underwriting, more so on the back end to look at policies and claims.
Yeah, I'd say on the underwriting side, so there's the ingestion, bringing in unstructured data, both at submission, but it's not uncommon that, and depending on who's in the audience, but like speaking to some of our clients, they might ingest initially 30 data points and then 30 to 45. And then when it comes to the actual pricing and rating activity, they might want up to 300. So there'll be like different steps throughout that process where they want to ingest unstructured data. One of the motivations for us bringing in a data ingestion library, which allows our clients to bring that in at the point of pricing and our underwriting post-submission. So seeing a fair amount of that. And then I would say using as a standalone tool to support research and analysis, seeing a fair amount of analysis of that. In terms of the kind of virtual underwriting assistant, we're working on one of them at Hyperexponential at the moment. There's more work to do around how you can do that like safely, both including considerations around regulation and bias that we've discussed today, but also doing it in an effective way whereby it adds value to the underwriter. Most underwriters at the moment won't necessarily intuitively know what prompts to use. Prompt engineering is becoming a job in itself, right? And so it's incumbent on the carrier or the insurer or the software vendor to think about how do you surface it up in a way that means that the underwriter can actually derive insight from it. So yeah, I agree with your answer. They're looking for the kind of low-hanging fruit at this point. And but it's definitely an exploration around how it can support on the underwriting side.
Yeah. Back to your question, what's the best way to get started? I should have mentioned this. You brought up a good point. Prompt engineering. There are tons of YouTube videos by 12-year-olds, but there are tons of YouTube videos that talk about how to prompt AI to get what you want. That's where you should start. Because you could kind of pick your way through like I did. Say, oh, hey, here's some data. Tell me some things about the data. And you can keep narrowing it down to finally it says, hey, I can't do anything else. But I would say start by watching a video or attending a train on how to properly prompt the AI to get what you want. Because at the end of the day, it gives you what you ask for, or it tries to, based on how
you have to make sure too, you know what you're getting. I was on a panel not too long ago, and I just wanted some kind of backup numbers to have in my pocket. So I asked ChatGPT for 10 years of data of combined ratios for 10 lines of business. So all I wanted was a matrix. And I got this table and wow, it was really interesting. And thank God I knew enough to realize that these numbers were, while they were directionally correct, they were not industry numbers. And so then I asked ChatGPT what the source was. And it said they were for illustrative purposes. It's like, thank God I didn't get up on stage and start spouting out these wrong numbers. So yeah, you just have to be so careful that you know what you're getting and kind of, be a little skeptical. But yeah, it's a fun tool. And sometimes what I'll do, even when I send an email, I'll write the email and then just stick it in ChatGPT and say, how's this? And then it says, oh, it's good, but you're kind of all over the place, and it'll tighten it up. So I think it's good for that. Okay, so another question about the U.S. regulation: how will AI supported underwriting decisions affect U.S. regulation? And Brian, maybe that's a topic that maybe you're more familiar with.
So. Again, so if you think about the role of Department of Insurance, and let's talk specifically about reviewing actuarial analyses, looking at rate filings, trying to make decisions whether you're going to approve a rate filing or whatever. There's some obvious low-hanging fruit to do the analysis. Hey, there's a particular format any DOI uses that you submit a rate filing. You could actually work and train a large language model to take that format, ingest all the data and say, hey, what does this look like compared to everything else we see? What are some of the things that jump out that we could address? That's low-hanging fruit. And I would actually be shocked. I can't say I know of any DOI using that. I'd be shocked if there weren't some actuaries at some of the Department of Insurance that are doing that already. Again, the first thing that's going to happen is going to make everyone's job more efficient. right? It's going to allow them to get through a rate filing and ask questions and do analysis that would take days. It'll do it in a moment.
Yep. Here's another interesting question. How can we use AI to review insurance policies against our standard checklists? Not sure what we mean by standard checklists, but
Exclusions, sublimits.
Yeah.
Yeah, there's a lot of research being done on that. The one group I mentioned earlier, they're doing it. There's a couple other I can't think about, but do some Googling of folks who are adjusting policies and large language models. There's a lot of work being done on that.
And the trick is to tie that analysis with the claim so that, like you said, adjust, you can look at the impact of limits and retentions and exclusions. Okay, here's another one.
Reese, jump in. That's on the underwriting side. That's an area where, as we build out our underwriter assistant, is somewhat a quick win in terms of being able to train what your underwriter guidelines are and then leverage that. Not just like what systems can do today is put hard guidelines on, like if you hit a certain limit, therefore you can't write it, or it needs to go through a referral or an approval or something along those lines. But what AI will enable you to do is to explain a little bit more around the why and to unpack some more information around that and kind of facilitate a conversation with the pricing tool or the pricing model. Definitely seeing that being implemented in the underwriting space, not least of all because we're speaking with clients about it at the moment.
Here's probably the last question I think we're going to do. What are the least risky parts of the policy life cycle to rely on AI to handle?
It's risky parts.
Risky part.
I'd probably say to start with where you've got a human in the loop, right? Because then you can RAG status, anything comes out you're not sure about it, like red or amber, and then see it. That's probably the quick answer. Yeah, welcome any other thoughts.
Yeah, perfect. All right, I think, unless Brian, you have a...
That's about right.
Awesome. Well, thank you very much, Brian and Richard and Tony, for giving us this opportunity to have this chat. Hopefully the audience found it valuable and enjoyed it.
Curious job. And as these attendees for being very engaging, we had a lot of questions. I don't think we cover all of them, but hopefully we can kind of reach back out to you and answer some of these questions offline. Thank you all for joining, and hopefully we can see all of you at the spring conference in a couple of weeks. Bye-bye.
Perfect. Thanks.